Hello, Seasonal Vantage Insiders. Alex here from MarketWise Asia. So I'm back from Bintan, so ready to go into the market again. So just want to do a very quick update on the things that I want to share with you about. Okay, and yeah, of course, yesterday I also sent out the updates on the members area over there. So in case you haven't watched read your email. Okay, so this is the things that I sent out. Okay, the watch list for the 18th or 25th of February week over here. So as just a very quick summary over here, as I mentioned, right, Monday is actually the President Days. So this is a public holiday. And I also mentioned that OPEX, okay, happen on a Friday and typically heading into OPEX because due to the options dealer hedging and such, right, the market tends to hit higher than OPEX day itself. The market tends to be a little bit weaker. Then after OPEX, the market tends to go down a little bit more. Okay, so and also February, especially the second half of February tends to be a weaker month based on historical data or seasonal that you might call it lah. And of course, today is the Wednesday, right? So Wednesday, okay, after the market close on the Nvidia going to announce its earnings. So this is going to be a highly anticipated earnings result. I think it's going to make or break the market tonight. Okay, after the market closes lah. So we'll see how it performs over there. But my sentiment or my bias is more towards the bearish side for now. So later I'll go through some of the things that I mentioned yesterday, also some of the position that I mentioned. Okay, and this is the S&P 500 futures. I'm looking at right now going to the S&P 500 spot index, or you can call it the cash index over there. So the level that I am looking at is actually 4995, and based on the market yesterday, okay, market actually closed below 4995 yesterday. So this is a key level which I deem as the zero gamma level. So zero gamma, this is based on options flow. So zero gamma, where the dealers change from a positive gamma to a net negative gamma. So if you don't understand what I'm trying to say, never mind. Okay, so trying to show you some resources over there. So as I mentioned, right, this year is the year where I want to dive deeper into options. We want to learn more about the options flow and how it can affect the underlying stocks or the index that we are trading, because options volume are getting exponentially, and it's increasingly affecting the underlying stocks, okay, or the index. Previously, okay, it should be okay, the underlying stocks that affects the option prices and such, but nowadays it tends to be like the options positions will affect the underlying stock or the index itself. So this is from the Spot Gamma under the free resources, under the free tools over there. Okay, so this is the Gamma exposure. You can read through about that. So this is basically from a positive gamma from the green side to the negative gamma. And you can see that, it is somewhere around here, okay, about 4995. This is the so-called the zero gamma. So this is a key level. So, from positive to negative gamma. So just want to show with you this. Okay, for those who don't know what's gamma is essentially, the second order Greek, okay, where how it will affect the delta. Delta is the rate of change from the price itself, okay, rate of change of delta from the price itself. This is the gamma, okay. So for positive gamma, so essentially, okay, the dealers are long call options, okay. They short stock as market goes higher, they buy back stocks when market declines. So this keep the market in a tight trading range. And when it switch to a negative gamma, right, this is where, okay, the dealers are starting to short put position. So they short stocks as market go lower. So do you get what I'm trying to say? Okay, market is going down already. They short stocks some more. It makes the market go down even lower. Okay, they buy back stocks when the market rises. So the market goes higher, they buy back again. This causes more volatility. Okay, so just a very quick explanation, right? So you can see over there, when dealer short put, right? Short put means they actually sell put options. When the dealer sell put options, okay, what's the bias? Okay, their bias is actually bullish, right? Higher. So they want. So you can say that essentially they are long. They have long position when they short put options. So when they are long, what do they need to do? Okay, to hedge their position, they need to short, right? But when the market goes lower, they need to short more. So that causes the volatility. Okay, and right now, from what I know, right, it seems that 499.5 is the level where it changed to a negative gamma. So that could increase the possibility of more volatility to come. Okay, in the coming days, especially after tonight's Nvidia earnings. Okay, so this is level that I'm watching on right now is below the 4995 right now. Okay, and yesterday, okay, I mentioned that I started to have a short position with OpenText Corp. This is under the ticker symbol OTEX, OTEX, right? So as usual, there's a wash and rinse trigger over there. So this is the OTEX, OTEX, right? So you can see that price has been heading higher, above the CPR, right now. Okay, right now price is below the CPR, retest the CPR, and it's coming down again, go back higher again. Okay, so you can see if you add in my usual pivot point indicator over there. So this is, you can see that price get resisted at the R1 and also at the Camarilla pivot. Okay, so all these are acting as a resistance level, and of course the wash and rinse pattern, it is at over here, this bar over here. So the I just do a very quick line over there. Okay, so this is somewhere around here. This is the wash line. So price broke above the previous day high and then came back down again. So my entry, it is about 39.91, 39 or 92. Okay, 39. Where is it? Okay, 39.92. Okay, so it's somewhere near the low over there. So yesterday price go down lower. So yeah, price continue to hit down lower yesterday. So it's still doing okay. So another stock that I mentioned yesterday, it is actually PG. PG is actually Procter and Gamble. You should be very familiar with these stocks, okay? Because all the consumer durable products like Head and Shoulder, the shampoo, some of the whatever dishwashing liquid, shower foam, all these personal household product is under P&G lah. So yesterday it was also a pretty bearish bar, but after that price, I was expecting price to go down like this yesterday. After the wash and rinse pattern, price go down lower, but it didn't go lower. It continued to go higher. But again, the wash line doesn't change yet, so it's still the same. The closing price is higher than the price close higher. So the wash line is actually price close. No, price didn't close higher. Okay, so the price closed higher than the previous day high, so still here. Okay, sorry. So the high, it is actually 157.42. Okay, 157.42. Okay, but right now I'm not so keen on this stock right now, because I think there are better opportunity. Okay, so this one I'll be keeping it aside for now. So if you go back to the data over here, so this is the data sheet for the bearish ETF. You can see that actually XBI, which is the biotech, okay, and also this IBB, the biotech, okay. Actually, the biotech IBB flashed a wash and rinse trigger yesterday, and also the Lithium X ETF. Okay, so for Lithium X ETF, right, this is the 20th Feb to 12th March, okay. 80% of time, okay, it is down, so there is about 22 calendar days. And for IBB, okay, so it's from 22nd Feb to 22nd March, about 1 month times also calendar days. So 80% of time it is down as well. So this is the one that I am looking at. So in fact, I had a position on yesterday. I went short on the lithium and also on the IBB as well. So let's take a look at the IBB. This is the biotech ETF over there. So again, you can see that price had a bullish run, okay, since last year December, and go ahead run. Price tested the CPR again over there, okay, and then price. Let me go like that. Okay, price can see that price tested the CPR again over there, okay, right, okay. And if you actually added in a simple trend line over there, right, so this look like a flat pattern over there. Okay, so 3 trading days ago, there was actually a false breakout over there. So I think that will catch a lot of trader off guard, or there will be some traders who went long, okay, on the biotech there's a break above this trend line. Maybe they went long, they buy, price cannot go higher, and then came back down again, and now it's back below the trend line again. So again, I'm expecting a more downside to go. So how much it can go, okay, we will see how the price action. And again, the wash line, it is actually here. So where price closed above the previous day high, okay, where it's also resisted by the central pivot range over there. Can you see over there? Okay, so this is the high is actually 134.90. Okay, 134.90. So yesterday I went short. Okay, I think shorted somewhere around the low over there. Okay, so slightly underwater right now, but I'm anticipating that there could be a more downside to go. Okay, like this is IBB. I've already had a position, and then this is the LIT. This is the lithium. This is over there. So again, lithium has been in a very severe downtrend. I can see over there, price going down. So you might think, hey, this is really like at a low already. But actually, if you zoom out on a weekly time frame, right, for lithium, okay, you can see that it went through a parabolic rise, okay, and then came back down. So in fact, it is still not at the lowest. There is a more downside to go if it is coming down. Okay, I'm not saying that it will definitely come down. Say that on the daily time frame, it looks like it is very, very extended downtrend like that. But if you zoom out further, there is still further downside. And based on as I mentioned, right, the data over there, the data that I mentioned, LIT, okay, 20th Feb to 12th March, okay, also about 20 plus calendar days. You can see that price actually it kind of followed the central pivot range pretty well. Can you see over there? Hit the CPR resistor, hit the CPR resistor, ping pong, coming down again. Initially thought above the CPR, you go higher, but eventually it came back down again. Okay, and then hit the CPR again over there, here, and then yesterday it came down. So there's also a wash and rinse trigger over there. So the wash line is here. Okay, the wash bar, it is here. The wash line is here, so where it broke above the previous day high. The high is 42.86. Okay, 42.86 over here. Okay, all right. So let's see whether price, there's more downside to go. I also have a short position in these two, so I think enough short for now. So LIT, IBB, and also OTEX. These are the few that I'm watching out. Okay, and yeah, so this is just a very quick update over there. So these are the few. I'm more gravitating more towards the buyer's side over there, and coupled with the OPEX plus the seasonal weaker February month, second half, then that's my general direction view. Okay, again, this is not a financial advice, trading advice, to trade. Okay, please do your own due diligence. Okay, don't just copy. I mean that you don't have to really just copy me. I could be wrong. Okay, because you don't know what's my entry price, what I take profit and such. But there are other stocks out there, and for the bearish stocks, there's also quite a number of stocks for this coming month or so. So please do your own due diligence. So with that, I wish you a safe trading. Any question? Okay. Yeah. Before I forget, okay, I just want to share this. There's Chris actually asked, right? OTEX has an ex-dividend date on the 29th of February. So is it advisable to close the position before the XD date? Okay, so let's head back to OTEX. Okay, OTEX is OTEX over there. OTEX over there. So so the XD tier. So you can see that the dividend, it is 25 cents. Okay, typically, basically it means that if you purchase after the XD date, you won't receive any dividend. Okay, so if you purchase now, you get to receive dividend. And typically after the on the dividend date, XD date itself, right? Okay, the stock price will drop by the amount of dividend amount. So the amount is 25 cents, but this is a $40 drop. So let's based on the closing price, right? 29.20, it dropped 25 cents. It just not a lot, just somewhere around here, somewhere around near the low here. So not much of a difference. Okay, so it doesn't matter. And so for me, I won't care about whether to exit. So in short, you won't have to exit if you hold through until 29 of February, okay, but who knows that maybe price can just come up within the next few days, okay, then I have already exited, okay, before the XD date, okay. So I hope that answer your question. If any other question, okay, feel free to comment in any of the posts or the latest post, then I can refer back to the latest post easily or easier. Okay, with that, thank you and safe trading. Bye bye.